Question number 14. It says Lance is entering an invoice for a new item of equipment in the accounts. The invoice shows the following cost. So it's a non-current asset. Water treatment equipment 39,800, delivery 1100, maintenance charge 3,980, sales tax 7854, total invoice value 52,734. Lance is registered sales tax supplier. What is the total value of capital expenditure on the invoice? So our question is very simple. How much is the total cost which should go into the non-current asset? I would speak again. If you remember when I was explaining this topic, I said that the cost of a non-current asset, it includes the purchase price plus any other expenses which are incurred to bring the asset to present location and condition. Which means that all the cost, all the expenses which are incurred until the asset is, which means all the costs which are incurred until the asset is ready for use. But there are some costs which you should not include. For example, maintenance charge, it is an operating expense. We should not include the maintenance charge. Sales tax, it can be included and it cannot be included. Sales tax is the case where you pay the VAT or sales tax. You have already done this chapter and I'm sure you have learned it there as well. But I will repeat it again. If the company is sales tax registered, which can recover sales tax, in that case, sales tax should not be added to the cost. It says that Lance is registered for sales tax. If it is registered for sales tax, we should not include this one because it will recover it later on. So our cost of asset will include only 39,800 plus 1100 because maintenance charge, it is repair and maintenance, it is operating expense. Sales tax is recoverable. It will become tax is recoverable. It will be shown as our current assets in our book. It will be our receivable, our recoverable. We will take it as current asset. Non-current asset will be only 40,900. Answer choice is B. This question was very easy, but the only thing here is that you should understand about the sales tax and the non-current assets relationship. Yes, if it says that Lance is not registered, then I would have added this 7,000 also into it. Last question, question number 15. Okay, so this is our last question for today. So let's see it. Banjo Company purchased a building on 30th June 2008 for 1.25 million. At acquisition, the useful life of the building was 50 years. Depreciation is calculated on the straight line basis. 10 years later, on 30th June 2008, so it says 20x8 and it says 20y8. So you should consider that x and y, there is a 10 years difference. When the carrying amount of the building was 1 million, so it means that we purchased it for 1.25 million, we depreciated it, and after 10 years the book value is 1 million. The building was revalued to 1.6 million, so market value was higher. So this is a case of revaluation. And how much is the revaluation? Book value 1 million, market value 1.6 million, 600,000 is revaluation. Banjo Company has a policy of transferring the excess depreciation on the revaluation from the revaluation surplus to retained earning. This concept, I'm sure you have seen it. This part I have explained in my video tutorial, and I gave an example of treating excess depreciation, subtracting it from revaluation surplus and adding to the retained earning thing. We have done it. Assuming no further revaluation take place, what is the balance on the revaluation surplus at 30th June 2009? So it is very clear. It says that 1.6 million was the market value, 1 million was the book value, 600,000 was the revaluation surplus. But then because the asset value increased, so you will calculate new depreciation, and there is new depreciation will be more than the old depreciation, and the difference is called extra depreciation, and that extra depreciation we take out and we transfer from revaluation surplus to retained earning. So in the beginning, how much is revaluation and how much is at the end of the year? Let's see the question, how it is done. Original cost was 1.25 million. Useful life 50 years. Depreciation is 25,000 per year. 10 years depreciation is 250,000. And net book value is 1 million. I calculated it, but they have already given it in exam in this question. But you can also calculate. Now, fair value is 1.6 million. So your revaluation gain is 600,000. Then you calculate your new depreciation, 1.6 million divided by 40. Previously we said divide by 50, but now because 10 years have passed, now remaining life is 40 years. So your new depreciation is 40,000. Your old depreciation was 25,000 and new depreciation is 40,000. So there is an excess depreciation of 15,000. This is extra depreciation. And this extra depreciation, we should make a treatment that we should take out from revaluation surplus and transfer it to the retained earning account. And like this, your opening balance on revaluation surplus is 600,000. Extra depreciation 15,000, you subtract it. If you remember the double entry, debit revaluation surplus account, credit retained earning account. So your revaluation surplus account closing balance at the end of this 11th year is 585,000. This is your answer choice number D, 585,000. So this is all with these questions. I said that I picked up 15 questions, but I have already within your this tangible non-current asset section, there are something like 30 questions. I have done 15. You should be doing remaining 15, plus you should try to find out more questions from Kaplan or any other study material, whichever you find out, but do as much practice as you can. And if there is now, when you will find those questions, I've also uploaded the solution to those questions. So first you should try to do questions by yourself, then you check answers. Some of your answers will be correct, that's okay. And some of the questions answers will be wrong. If there is any wrong question, you can check the solution. And when you see the solution, I hope that you would understand that where did you make the mistake. But remember, if you see the solution and still you do not understand that why they did it in that way and you are unable to understand the treatment, then it means that you do not understand the concept. Because if you know the concept, then after seeing the solution, you should understand. But if you see the question and you see the answer and still you are unable to understand, it means that there is some gap, there is some weakness in your conceptual understanding. Then you should go back and watch the videos again, or maybe you should read the book again. Otherwise, there is no need to read the book again. Thank you very much, and let's move to the next chapter.